Welcome to CivicSource.com. Our auctions cut through ambiguous legal questions and unfamiliar paperwork to provide our users straightforward investment or real estate development opportunities. This video covers the Louisiana Tax Certificate auction process, which allows Louisiana parishes and municipalities to collect delinquent taxes owed to them, while simultaneously offering opportunities for individuals to make an investment with potentially high returns. Property taxes are due December 31st, after which they become delinquent. Parishes and cities hold annual tax certificate auctions to recover delinquent property taxes. During the auction, each property has a set price based on the amount of delinquent taxes and cost, which does not change, meaning bids do not increase or decrease the price of the property. Instead, ownership interest in the property is the biddable component, and the winning bid is awarded to the bidder willing to accept the lowest percentage of ownership in the property, while still paying the full amount owed for delinquent taxes and costs. For example, let's say that two properties are each listed at $1,000, and Jane puts bids on both at 100% ownership. Then Paul comes along and bids 1% on one of those properties, and no one else bids after that. Jane wins the property on which she was the only bidder, and Paul is the winning bidder on the other because he accepted a lower percentage of ownership. Regardless of the percent they bid, they each still pay the full $1,000 due immediately upon closing of the auction. The original owners have 3 years to pay Paul and Jane back the delinquent taxes plus interest and penalties. Paul and Jane cannot take possession of their properties during that 3-year period, but they are obligated to pay subsequent years' taxes or the property will go back to sale. Immediately after the auction, the owner would need to pay Paul or Jane the amount they paid at the tax sale, plus a 5% penalty and 1% of the first month's interest. Every month after that, the interest amount goes up by 1%. So if their properties are redeemed after 6 months, Paul or Jane would be reimbursed the price paid plus 11%. After a year, they would be reimbursed the price paid plus 17%. If the property is redeemed at 3 years, at the end of the redemptive period, they would be reimbursed 41%. If the property owner does not redeem their property within the 3-year period, because she bid 100%, Jane can now quiet the title and take full ownership and possession of the property. Paul would want to contact an attorney to find out his rights and obligations related to his 1% bid. Thanks for watching, and be sure to sign up for our CivicSource.com newsletter to be notified of upcoming auctions. Enjoy the sale.